Hey everyone, how's it going? Welcome back to another quick educational video. This one I get a lot from different new traders throughout this period of time. Certainly, there's a surge of new traders, and I usually get asked by this question, and it's how to prevent blowing a trading account. It doesn't matter which market you trade. Different traders, experienced trader or new traders, they have experienced something like that before in some part of their trading journey. And I want to go more in depth into these topics here where it will help you to prevent that, it will help you to be consistent, and it will help you to be a profitable trader. So let's take a look into these. And before I start, it's important to understand that this is all part of a learning curve that you must endure. You must, experience to in order to be consistent. Many traders, many experienced traders, many profitable trader or consistent trader, all been through some part of their trading career, potentially blowing account or potentially lose a severe percentage of it, myself included as well. So I want to talk about these things because that's what helped me to be consistent. That's what helped me to, you know, pretty much pass the threshold of that and leading into a new perspective of trading. So there's a few factors that I want to talk about. These ones are going to be helping you to achieve the consistency and prevent blowing an account. Okay, so let's go over a few aspects where I think it's very, very important to have. So the first thing you must have is a trading plan. Okay, it doesn't matter what strategies, what style trading, what market, it really doesn't matter, but you need to have a plan in place before you start trading. Well, what do you need to include in the trading plan? Well, I list off a few key factors below in the video down there. You can take a look. But the point is, having a plan is to you have your guide in situations, right? How do you plan to enter a trade? How do you plan to manage a trade? How do you plan to get out of the trade, right? So all these should be written down in the plan so that you're not making emotional decisions. You're making a decision based on your plan. And of course, this plan can be tweaked or can be worked on over time, but you follow your plan so that you deviate from any type of emotional or any random decision making. Okay, the second thing I want to talk about is backtesting. Most traders, when I said backtesting, they have no idea what I mean, and I made a backtesting video below there as well. But the whole point of backtesting is to train your brain to recognize these previous price action patterns or any type of market conditions and any type of strategy you choose to trade that they obviously repeat, right? And that's why we trade as technical analysis because they repeat over and over again, and that's what we focus on in the market. So by backtesting, you're going to train your brain to recognize these patterns that are happening, and then when they're actually in the live current market condition, you're going to be able to execute them without any errors, without any fear, right? I mean, most people have fear of missing out or fear of losing. You train yourself to avoid that, right? And the third thing I talk about is forecasting. So after you backtest enough, when you're actually trading the live market conditions, you need to forecast a few possibilities. Right? I talk about how to do forecasts effectively. You're doing this again is so that you're prepared for any type of condition of the market. So, for example, if you're looking for a sell on the position, and then you're going to forecast how to execute a potential sell positions. You might even open up your drawing tools, right? On TradingView, you can set your drawing tool like this, so you can already calculate your stop loss or your take profit, etc. And this is what you do to forecast a potential entry before it happens. So you're not just randomly going on your phone or on your computer, going on your broker and just executing the trade randomly, right? You're forecasting a potential entry, and if the price develop into that, if the market develop into that condition, then execute the trade accordingly so that you sticking to your plan, right? Because you're sticking to your plan to execute a trade, and that should be such continuously and consistently. Okay, so these three things here: trading plan, backtesting, forecasting, are the things that you must do even prior to enter a trade. And let's get into a couple other things where it's really important. Next, I want to talk about risk management, right? Most people think risk management is such, well, risk management is about the most important thing that you can really work on in trading, okay? At the end of the day, you need capital, you need money to trade. So blowing an account or severely lose a huge percentage of your account is really not ideal. And that's why risk management is the most important part, right? You must get that done. So you must understand that you're not here to make a quick buck, right? Most people get into trading thinking I should go from 1 to 100 instantaneously, but what end up happening is that they lost about once they reach 5 or 10, they blow their account or they lose enough money and then they give up. It's not a race, right? You're trying to slowly and consistently reaching to an optimal stage of trading, but it's not a race. And that's why risk management is super important. However, you decide to trade based on different strategies you use, it really doesn't matter, but you should focus on how much to risk, right? Whatever trading that you use. Ideal way, people often hear 1% is very ideal, right? 1% of account or something, a set amount to your trading account that's not too severe. And you stick to that over and over again. You don't deviate from that, right? You don't suddenly take a trade to risk 5%, right? And then lose 5% right away and then jump back to 1%. That's not how it works. You always stick to a same approach in the market, and that's going to help you. And looking for target, right? Risk management. We talk about on average, you should try to hit, different strategy, of course. But me personally, I would always look for a 3 to 1 risk reward management because that's going to help you to be more consistent in the long run. This indicates that every trade I take, I'm trying to hit at least 3 to 1 of a profit. And if I lose, I'm losing one. So even if you're not a 50% trader, 5 wins, 5 loss, even if you have only 3 wins, or 7 losses, but at the end of the day, you still can be break even or a little in profit. And this is how you're going to keep yourself in the game long enough to learn more from trading, to be more consistent. You need trading account, you need trading capital, right? So maintaining an account, maintaining a capital, understanding the risk is the most important part of not blowing a trading account. And let's move on to stop loss. Many people don't set their stop loss, and when I heard about this, it's actually a maze to me because that's going to help you. That ties in directly to risk management, right? We're risking 1%, so that's why we're setting a stop loss so that it's only going to lose me at most only going to be 1%, and you can extend your profit into different kind of profit to maximize your reward. So stop loss is the most important part, right? Because you need to limit your losses in order. What if the price continue to go against you? Many people, when price reach their stop loss, emotion got the best of it, and then they remove the stop loss, so the price is like continue going upwards and upwards and upwards, and they're losing 2%, 3%, or more, and then they're just hoping the price is going to reverse. But what if it doesn't, right? Trading is all about probability. It's not right and wrong. So maybe this time you remove the stop loss and then price turn out back and you think that's going to be a way that you keep doing it. And the next time it just continue up and more and you're losing 6, 7, 8 more percent. And when is that going to go? When is that going to stop? Okay, so stop loss, very important, guys. Make sure you set it on every single trade. That's going to prevent you to lose anything more above your initial risk management or risk amount or risk percentage. Okay, so let's talk about trading psychology now. So a lot of people can get most of these stuff right: trading plan, backtesting, forecasting, risk management, stop loss. On paper, on technical, it all looks somewhat okay, somewhat easy to do. But what about trading psychology? Because emotion, right, is the biggest thing that we can't control in trading. And this is why it needs time to work. You need to experience it firsthand. You need to pretty much take losses, experience it in order for you to learn. So two things I think trading psychology outlines is going to be FOMO, right? Fear of missing out. We often hear this word, fear of missing out. And I want to add in fear of losing, right? Fear of losing, okay? Because these are two different things, but they really all tie into the same thing. So let's talk about fear of missing out, FOMO, right? What does fear of missing out means? Well, you fear that the trade will just continue without you and you're going to lose out the potential trade or potential money, right? So let's say a trade is into a correctional phase and it's going to potentially go down and you're jumping into the gun somewhere here because you don't want to miss this trade, and what ends up happening, price is making a bigger correction and just takes you out, and then before it start dropping creates another big emotion on yourself. Okay, so this is what a lot of new traders, even experienced too, they will experience fear of missing out sometimes during their trading career. But again, if we look back at this, if you have a trading plan, if you backtest enough and a forecasting that you have done is correct, then you shouldn't have fear of missing out because you already backtest enough. You know that in order for price to move into an impulsive phrase or take into action. It needs to do certain thing. I shouldn't rush the trade because I backtest enough. I have seen how the price has moved in the past, and I should be more patient waiting for such thing. And then in addition, you've done your forecasting already. So you already forecast the different entries that you're going to do, the different setups, how you're going to set your stop loss, how you're going to look for a potential target. And you shouldn't get fear of missing out because you already forecasted what are the potential entries I'm going to do. If that did not develop, if that did not happen, then no trade for you. It's very simple. Okay, that's kind of how you prevent fear of missing out. Okay, you understand that you can never capture every single move, every single run, every single trend in different markets in the world. That's impossible, right? You can only capture some of it, right? So start thinking about it. This is why trading psychology is important. Start getting to think that you should be grateful for all of the opportunities that the trading can give you, all the markets give you, and you just try to capture some of that. That will make you feel much happy, more graceful of what the current condition that can give you. And second, trading psychology, fear of losing, right? It's the same idea. Once people start losing money, they either get into a fear of missing out or fear of losing money. They're afraid that every single trade I take is going to be a loss. I'm going to look at this computer or look at this phone every single second to monitor the trade and end up creating more emotion as the price going up and down, left and right, and you're just not feeling very positive about that. But once again, look back what we talk about backtesting, right? Trading plan. If you have everything in place, fear of losing money shouldn't be a problem because you backtest enough. You understand whatever strategy you trade, whatever style you trade, you backtest enough. You see them play out over and over again in a high percentage. It's not guaranteed. No strategy guarantee 100% strike rate, 100% winnings. What you do when you backtest is to understand that they happen more frequently, higher probability, and valid setups that you take them over and over again so that statistically you're going to be maybe a 70% strike rate on the strategy that you trade and you backtest so that you're not, even if you lose a trade, you know that that's just part of the probability, and in time your trading, your winnings should cover your losses. Okay, and lastly, I want to go over a few things that you should avoid, that you should try not to do in order to not blow a trading account, right? So over leverage, right? Most brokers will offer you leverage, especially forex brokers, right? We have crypto brokers, different equity brokers, but they all somewhat offer leverage, right? And over leverage, a lot of new traders tend to blow their account because of this main topic, over leverage. They don't understand how leverage works, right? Leverage can work with you as well as against you. It's how you use it effectively. Okay. For certainly, if you have a small account, you're always trying to grow or maximize that account, and what you end up doing is over leverage that account. Let's say you have $100 account, and if you stick into a strategy like my mentioned 1%, it's risking $1 per trade, and to some people that is too slow, that is too not enough gain potentially, and now they trying to be like, I need more money, I need to win more money, and they end up risking maybe 10%, $10. So $10 may not seem a lot to $100, right, in most people's eye, but that is 10% of your trading account. So you have to think about everything in scale in terms of long term now, right? You're trading $100 account, you risk $10, that's not much. What if you're trading $100,000 account now? Are you going to risk 10% of that, which is $10,000 per trade on a very tight stop loss or no stop loss? Are you going to live with that? Right? Start thinking about that in perspective. Okay, so start young, right? Start when you only have a small account, building into a good practice of eliminating these over leverage type of things that you do, right? You need to control your emotion. This is why when people start losing a few trades, right? Fear of missing out kicks in, fear of losing money kicks in, they start over trading, right? They start opening bigger account, bigger positions, and end up losing more of their account, right? That's why you usually hear people uh, will lose a week of gain in one day because of their over leverage trading, and leads into revenge trading. What does revenge trading means exactly? Well, simple as saying is you're revenging on your losses of the trade that you took, right? Most experienced trader and new traders all been through this phase, myself included in my beginning of my journey. Everybody will go through some part of this phrase where you take a multiple of losses, and then you're in fear, you're angry, you want to revenge your losses by taking extra trade, by over leverage your trade, or over take number of trades, right? And you don't set a stop loss, you don't have risk management. So all these combinations of factors that are building in is going to help you to not sustain a trading account. That's going to make you blow the trading account, right? When you have multiple of these issues happening in your trading journey, in your trading currently at this moment, right? So eliminate all this, right? You understand that revenge trading will not help you at all, right? You need to keep your emotion at bay. You need to understand that losses are going to happen, but you shouldn't revenge on them, because if you again done your trading plan, if you've done your backtesting, if you've done your forecasting, then losses are part of trading. You understand it's just a probability. You don't let your revenge trading or your over leverage or over trading get into the way. You stay consistent, right? You stay consistent. You don't let these trading psychology, these effects kick you in. You stay emotionless when it comes to trading. Okay, so the last thing I want to talk about is journaling. Okay, journaling is the most important part as well for your trading development, because you must journal down all your losses and your wins. This is the part where a lot of traders refuse to do. They feel like this is like a homework. This is not, they feel like this is in like elementary school or something doing homework. Nothing can be further from the truth, because journaling is going to help you to understand where uh, which part of your trading journey that needs more work. Is it because your entry? Is it because your management? Is it because your stop loss? Is it over trading, over leverage trading, revenge trading? You're all going to journal down every single part in here, because you're going to look back at it every week or every month to identify which area you can improve. Right? This is how you get better as a trader. You're not doing this to, for your own, to show off to, or for your own good. You're doing this for your future self, to look back, to gain from the experiences. It's okay to take losses. It's okay to been through all these trading psychology, fear of missing out, fear of losing money. It's okay that you over leverage trade a bit. It's okay you revenge trade a bit, but you journal it down, so when you look back at them, you understand the mistakes you took. You understand the mistake wasn't from your trading plan, wasn't from your backtesting, wasn't from your trading strategy or style that you use. It's actually the psychological emotion aspect that you're losing. So you understand that once the technical stuff comes to you, it's about the emotional side of things to prevent, emotional side to work on, to prevent blowing the trading account. Okay, so most of these topics here, I made videos on them below. So if you're interested, you can take a look below. That will explain more in detail. But in my opinion, these are the main topics or aspect that a trader should really work out for, to really understand, in order to prevent blowing the trading account. All right, everyone. So thank you very much for tuning to this quick video. I know it's almost 18 minutes, but I want to touch base on every single aspect. I felt these are all important aspects where you must understand in order to be consistent in the market. All right. Thank you very much, guys.